The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Well, for the second day in a row, I've chosen stocks of the day. And, apologies because we've gone back into the big end of town, but it's been a big week in terms of news flow for Woolworths and COLs. Today, the ACCC released an interim report about the supermarket's near total control of the country's grocery market with 67% market share between Woolworths and COLs. It also follows allegations brought earlier this week against the major supermarkets in federal court, accusing them of misleading conduct over discounting. And the politicians are involved, with the Prime Minister moving to introduce a mandatory code of conduct. So both share prices have suffered this week, today being no exception. So the question now is, are Woolworths and COLs looking good value now? Is their stock, excuse the pun, on sale? Down. Prices are down. Luke, 67% market share. That goes to speak of the strength of the business, does it not?
It certainly does, and I hadn't seen that report, Nadine, but I actually wonder whether that's a market share that's slowly coming down over time, as obviously Aldi and a few others try to encroach in the space. Look, it was really interesting. As you said, large cap stocks not always on my radar all the time, but having a look for the program, these stocks have had a very good run. You see that there, particularly Coles, sort of out competing Woolly, especially from a market point of view, I suppose. And they were looking a little bit toppy. I mean, these are the sort of businesses, they're defensive, they'll be around. You're really buying them for that sort of defensiveness, the lack of volatility and a good yield. So on the runs they'd had, and they were looking a bit expensive, they've pulled back now to what I think are pretty reasonable levels for these types of businesses. They're both in that sort of low 20s multiple. If you can get them between sort of 21, 22, if you can get that dividend yield around that 4 to 4.5% where both of them are, I think it looks okay. So of course, the caveat being for a certain type of investor, as Richard said in his intro, if you're looking for growth, then these guys won't give it to you, obviously. But that defensive income investor, I think on this pullback, if you don't have Woolies and Coles in your portfolio already, these are the sorts of levels where you'd be accumulating for those long-term holds. So let's call it a hold for the program. But it's quite interesting. And I think, these sorts of impacts are the ones where you look to add a Woolies or a Coles to your portfolio, whether it's a broader market sentiment or something like this, which hits the headlines. But I think we can all sort of look through and say, in a year or two from now, these will be forgotten as they always do, and these stocks will continue to chug higher as they just generally grow with the economy and population growth. So we'll say a hold, but they certainly, on that pullback, I think look much more attractive than where they were a week or two ago.
Richard, any view on the two supermarkets, Woolworths and COLs?
Well, everything looks more attractive on a pullback, doesn't it?
Yeah.
What was amazing, it was just such amazing news because where there's smoke, there's fire, but the ACCC utilising social media for the first time. I mean, they're finally getting into the 21st century, which is encouraging for everyone who's looking for value out there. But I think Luke hit the nail on the head, which is that I guess the earnings impact is probably going to struggle to be great. It's probably going to be 1 or 2% at most, or I would say in that ballpark. The sentiment, on the other hand, is going to stay down for a while. They're going to take a while. They've got new management, new people in charge, but they're going to take a while to get some clear air. Everyone, okay, the charges aren't proved, but everyone in your hearts, in your wallet, there's something to it. You just know there's Schadenfreude's the basis of a lot of sentiment in Australia, certainly in the stock market. So what I would say is that these are stocks that have great competitive edges. Probably, the sites, you can't compete with those sites. I mean, they are just fantastic in your population centres. The data that they get, unparalleled, hidden value. What I would say is these are great stocks for your core portfolio, and we would look at dollar cost averaging, not aggressively, but not buying 10% a go of your overall position, but certainly 2 to 5%. Because these are such good stocks to have in your portfolio for the long term.
Good, thank you. That was the stocks of the day, Woolworths and COLs.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.